This video is on the technical analysis of Binance Coin, and we're on the monthly chart. On the monthly chart, we can see that the market had given us this huge double top, which had a neckline more or less at that level, and we saw price actually break into the bottom side of that neckline, heading back to the neckline to test it. And at this point, we actually expected the market to move further down to around this level, which is in line with where this structure started. However, we can see that over the last couple of months, the market has been moving rather sideways in and around that region, and some would say actually that that neckline has been violated, and that it makes the M structure also no longer valid at this point in time. However, as much as we have this M structure as well as the neckline at that point, we can see also that we seem to have a triangle of sorts, and what this tells us is that we either going to see a breakout to the upside or the bottom side. In my humble opinion, chances are we're going to see a breakout to the bottom side. Why do I say so? That is because, guys, this huge M structure that I just spoke about is still very much valid in my humble opinion, and I know what's going to happen. Chances are is that we're gonna see a breakout to the bottom. I know that in the media there is some hype in as far as the crypto space is concerned. However, in my humble opinion, I believe that we're gonna see a breakout to the bottom side before we actually see the market continue to move further up. Anyway, let's proceed. What else do we see on this chart that we should be paying attention to? As much as I'm saying, guys, that we have this huge M structure and that the anticipation is for the market to move further down, just also note that we have an opposing structure in the form of an overextended W structure, which also has a neckline at that point. So what's happening at this point in time is that we have that double top or M structure as well as that W structure, and they both have necklines in more or less the same area. And what this means is that buying or selling at this point is actually very risky. It's actually very risky because we may see a breakout in either direction, right? Anyway, let's head down to the smaller time frames and see if we can actually get around this, right? Anyway, let's head down to the weekly chart, and here we are on the weekly chart. Here we are. What do we see on the weekly chart? Remember, guys, I mentioned to you that the market right now is at a very strong level of both support and resistance. Why do I say so? That is because we have this huge M structure which has a neckline at that level, and we also have this huge W structure which also has a neckline at the same level. Hence I said actually buying or selling at this point is very risky because the market may go in either direction. But as far as I'm concerned, I believe that we're likely going to see a breakout to the bottom side, right? We're likely going to see a breakout to the bottom side, and what's happening right now, or what a lot of traders and investors are waiting for right now, is for that breakout to actually happen, right? Anyway, what else do we see at this point that we should be paying attention to? At this point, really, I don't see much. I don't see much really at this point. So what I will do is head down to the daily chart, and here we are on the daily chart. Let's have a look what's happening on the daily chart. I'm just going to zoom in a bit. Let's see daily chart. On the daily chart, we can see that actually, let me just go back for a bit. Remember, guys, on the bigger time frames, I spoke about how we have this triangle more or less, right? And I said to you guys that we're likely going to see a breakout to the upside or the bottom side, right? But just to zoom in, I also want to point out that as much as we have that triangle, we also have the structure over here, which is another overextended M structure, which also has a neckline at that point. And we can see that actually the neckline has been violated to the bottom side, and what we expect to happen at this point is for the market to actually move further down to around this level to complete this M structure actually, right? Anyway, what I'm going to do now is just add a neckline for this huge M structure or double top. There we go, more or less. And just remember, guys, that support, or rather necklines, are areas and not so much actual lines, right? For the sake of keeping my charts clean, I'll have a line, right? But as I've said, guys, the anticipation at this point is for the market to complete this M structure, in my very humble opinion. What I would love to see actually happen at this point is I would love to see the market actually close sufficiently below that neckline, and once that happens, I will then wait for price to head back to the neckline to test it. And at this point is where I would look for those potential selling opportunities to around this level, especially if the neckline aligns with any key numbers that we have on the Fibonacci retracement tool, right?